The top stories live from the Sky News City studio. UK economy returns to growth in April, helped by shopping and nights out. Shell to cut spending in coming years while giving more to its shareholders. Why generative AI could add more than $4 trillion to annual global productivity. Plus,
cold shower falling off my roof, and my heels are on the ground.
From toy to screen, I'll be speaking with the Chief Executive of Mattel about Barbie the movie. Good morning, this is Ian King live in our business and economic news from the heart of the city. The UK economy returned to growth in April on the back of an expansion in the services sector following a weak March, but output in production and manufacturing both declined during the month. Well, the Office for National Statistics says that growth came in for April at 0.2%. That followed a contraction of 0.3% during March. According to the ONS, growth over the 3 months to April was 0.1%. Well, this morning, the Chancellor, Jeremy Hunt, said that while he was positive about the economic outlook, tackling inflation remained his top priority.
Well, today's figures confirm what the OECD said last week, the IMF said last month. The Bank of England themselves have said that there is underlying resilience in the British economy. And of course, that's positive. But we still have a big issue with inflation. That is the number one challenge we face. We have to do everything we can as a government, as a country, to support the Bank of England in their mission to squeeze inflation out of the system. And that is our primary focus.
Well, joining me now is the Chief UK Economist at Capital Economics, Paul Dales. Paul, welcome to you. I mean, the March figure was unusually weak due to the weather. Is this just a bounce back from that, or is there more to it, do you think?
There's a bit more to that, but it has to do with strikes, actually, rather than the weather. So there are a lot of train and teacher strikes in March, which didn't happen in April. So activity in those sectors, transport and education, rebounded. However, on the flip side, there were a lot of junior doctor strikes in April, which did drag down activity. But the bigger point here is that the economy so far has proved reasonably resilient and hasn't yet fallen into a recession.
That is the magic word, resilience, Paul. Why do you think it is? I mean, every CEO I speak to says things have gone much better this year than we expected. Why do you think that is the case?
Well, I think there's a couple of factors. The first is that households seem to have been able to dip into what you might call their pandemic savings, any slush funds they built up during the pandemic when they weren't able to go out and spend. And the second is actually the government has dished out a lot of money to many households and businesses over the last year to cope with the big rise in energy prices. And that's really helped. So essentially, the UK economy has managed to get through what you might call the cost of living crisis without a recession. The next step, though, is what I think we can call the cost of borrowing crunch. Now, that, I think, is what lies ahead of us.
Yeah, absolutely. I mean, just before I came on, I was reading some tweets from Nick Macpherson, the former permanent secretary at the Treasury, and he says he thinks now there's a real danger now. The Bank of England is going to have to raise interest rates so high, effectively the UK goes into a recession.
I agree with that. Yes, we've been saying that at Capital Economics for a while. The problem with the economy actually being quite resilient, it means that the labour market is quite strong, as we saw in some data released yesterday, which is generating this inflationary pressure that the Bank of England needs to get hold of. So I think interest rates are going to have to rise from 4.5% now to perhaps 5.25% in the coming months. And that, together with the rises already seen, suggests to me that households will just have to pay more for their borrowing, for their mortgages, and as a result, the UK will fall into recession later this year.
Now, the Bank of England's Monetary Policy Committee meets again tomorrow week. Most people assume that there'll be another rate rise. I guess the big question is whether it's a quarter point or a half a point.
Well, that's right. I mean, 3 weeks ago, there was a question of whether there'd be a rate rise at all. But now a quarter point seems nailed on. I think there's some chance of a 50 basis point hike. So that would be a half percentage point increase to 5%. But my money's on a couple of quarter steps, really. So we go to 4.75 on the Bank of England main interest rate next week. And then there's 2 more hikes after that to 5.25. But in all honesty, a lot of this effect is already coming through, because we've seen in the last couple of weeks, mortgage lenders are pulling their best fixed rate deals and putting new ones out with much higher interest rates. So households are starting to feel this, and this was going to be a constant theme throughout the next 6 to 12 months.
Paul, what are your reflections on what we've seen in the gilt market this week, the market in UK government bonds? Because obviously, for example, yesterday, the 2-year yield hit its highest level since the global financial crisis. I mean, this has a big implicit increase in government borrowing costs.
Yes, it does indeed. So that is the main effect on the government, is that they'll have to pay more to borrow from the financial markets. And in some ways that takes money out of the economy. I'm not too worried about that. The government can cope with that. What I think is more worrying is the increases in gilt yields are feeding through into higher mortgage rates for households. That's, I think, is where the pain is going to be felt. And that's where the real weakness is going to come through. It's worth saying, although we think there's going to be a recession, I don't think this is going to be a huge recession. I don't think it's going to be a deep one. I don't think it's going to be a long one. But I think it is too soon to conclude that just because the economy has done reasonably well over the last year, that it's going to avoid a recession over the next year.
Paul, for the benefit of viewers who don't necessarily be au fait with how these things work, I mean, Andrew Bailey, the Bank of England governor, has said recently that he felt only a third of the rate rises so far had actually been transmitted through to the real economy. On that basis, why is the bank still raising interest rates? Some people might say, well, why can't they just wait to let the rate hikes take their course?
That is one option, and there's a couple of people on the Bank of England's Monetary Policy Committee who have taken that view and have not voted to raise interest rates over the past few months. So that is a reasonable view to take. The problem is, in my view, is that once inflation is high and people see it being high, then businesses and households get used to the idea of it being high. And I think you need to actually raise interest rates quite sharply to create a little bit of economic weakness, to convince households and businesses that inflation is going to come back down. If you take the foot off the brake too early, then essentially inflation is just going to run away. And there's a bigger danger that it becomes embedded in people's expectations. Instead of people assuming that inflation is going to be 2%, they might assume it's going to be 3 or 4%. And then to get inflation down, once that's happened, is really hard. You need to generate even more economic weakness. So it's probably the case, actually, that with interest rates, it's best to go a little bit too far now, just to make sure you really get inflation down, because that is going to mean for households and businesses, they're going to be in a better place in a couple of years' time if inflation is around 2% rather than 4%.
All right, Paul, we have to leave it there. Good to talk to you as ever this morning. Thank you very much.
Thank you.
Some other business news stories for you now. And Shell said this morning that it will be cutting its spending during coming years while handing back a greater proportion of its earnings to shareholders. Well, the oil major said it would cut its spending in 2024 and 2025 to between $22 billion and $25 billion US dollars per year. That's down from between $23 billion to $27 billion this year. At the same time, between 30 and 40% of cash flow from operations will be returned to shareholders, compared with 20 to 30% previously. This will include a 15% rise in the dividend. Well, the announcement represents an effort by Shell's new Chief Executive, Wael Sawan, to restore shareholder confidence amid unease over the company's energy transition plan. Mr. Sawan confirmed that Shell plans to hold oil production steady between now and 2030, while insisting it remains on target to become a net zero emissions energy business by 2050. Shares of Robert Walters fell by more than 15% this morning after the recruitment agency warned that profits for the year would be significantly below expectations. The company said that reduced levels of candidate confidence and lengthening time to hire, which began in the second half of last year, had not started to improve. It said its net fee income during April and May had been down 10% on those months last year. But the company insisted the tight labour market meant that when market confidence recovered, there would likely to be a return to meaningful growth. And the fantasy miniatures and collectibles group Games Workshop said this morning it expects to post an annual profit of at least £170 million this year, up from £157 million a year ago. The maker of Warhammer said it expected sales for the year to the 28th of May would come in at not less than £440 million, up from £387 million during the previous 12 months. It said that during the year it had handed employees bonuses totalling £11 million, up from £10 million in the previous 12 months, and that works out at more than £4,000 per employee. The shares are currently ahead by just over 4%. Now, one of the main talking points in the tech sector and beyond just now is the extent to which generative AI applications like ChatGPT have the potential to transform economies. Few people have tried until now to put a figure on that, but today a new report published by the consultancy McKinsey & Company suggests that generative AI could add between 2.6 trillion and 4.4 trillion US dollars worth of annual productivity globally. Well, joining me now is Lorena Yee. She's senior partner and chair of the McKinsey Technology Council. Lorena, good to see you this morning. I mean, this estimate is based on 63 new generative AI use cases, as you call them. Give me a few examples, if you would, please.
Sure. Let's take all of our jobs, the job that you're doing right now. How do you prepare for this? How do you decide marketing scripts for campaigns? How do you think about drug discovery? A super set of jobs are going to see superpowers attached to them with generative AI. And so we looked at these 63 use cases. And what we really did was we dug into the anatomy of work. We looked at 850 jobs in the global economy and broke those down into 2,100 activities and said, how will generative AI impact each of these activities? And what we found is that 70% of the global workforce will see up to 50% of their work activities impacted by generative AI. I mean, that is a stunning number. And it's really through looking at how work changes that we get to some of these big numbers like $4.4 trillion of productivity.
I was going to say, it's quite a difficult thing to try and estimate the value potential in those use cases.
It absolutely is. And one of the things that we have to understand is what we were laying out is the full potential. What does that look like? And what we're really looking at are two things. We're looking at the impact of the automation technologies that we already have today. And we're also looking at the added impact of generative AI, which has just broken fast into the scene over the last 6 months. But one of the things that's really important is this isn't just about technology. This is about people. And this is really a leadership moment. As leaders, particularly in the business community, we have a choice on how fast we lean forward on this trend. What this report shows is the economic potential. What we will actually see depends on our business decisions and how we actually make those decisions going forward.
That's a really key point that you've made. I mean, all of this ultimately depends on how rapidly businesses can adopt this technology.
Absolutely. And that's not just a cost technology capability question. That's a choice about how do you want to think about the workforce of the future? And let me just give you a concrete example. If we can save 50% of the time of your time and my time as knowledge workers, what do we want to do with that productivity surplus? Do we want to give it back in terms of time to you and I, maybe have a 4-day work week? Do we want to drop it down to the bottom line and give it to our shareholders, to the CFO? Or do we want to rethink how work is done and actually spend more time at the things that humans are uniquely capable of doing, which is human connection and interaction? So there are a lot of choices that we have in front of us. I think adopting the technology is just the first step.
I think when you talk about a 4-day working week, a lot of people will see that as a positive, given all the concerns over the number of jobs it will potentially destroy.
Well, I think what's really important is this report is not about destroying jobs. This report is saying, how can generative AI and other automation technologies affect how we work? Now, that could be, and in most cases, what we're seeing is that augments our job. It gives us superpowers in how we work day to day. And in the early business cases and how we see leaders responding to this, most of what we're seeing so far is augmentation and humans at the center of things. But we will see. These are business decisions that we need to make.
Now, one of the sectors that you think is going to be most impacted is banking. Why is that?
Well, one of the things is when we looked, just to geek out with you, when we looked at the 63 use cases and we said, how does that affect different functions? The vast majority of it were really knowledge workers, sales and marketing jobs, software engineering, R&D. These were a lot of the jobs that were most impacted by generative AI. And if we look at a bank, there are a lot of people with these jobs. So think about wealth managers, think about the large IT and software enablement they have. And so that's really one of the reasons that banking is certainly affected. We also see banking as a sector that's leading on generative AI. There are some fantastic early use cases of thinking differently about how to synthesize information for wealth managers and how they can actually spend more of their time with their clients and less of their time analyzing and drafting materials.
Lorena, it's a fascinating report. Thanks very much for coming on to discuss it today. Thank you. Now, recent figures suggest that the UK is the 5th most popular destination for foreign direct investment around the world, attracting more than $2 trillion worth of investment in 2022 alone. We tend to think that investment largely in the UK comes from US companies like Ford, or more recently, Indian companies like Tata. But before them both was Bosch. The engineering, car parts and appliances group this year celebrates its 125th year in the UK. It was the first country in which it opened outside its native Germany. It now employs around 5,500 people throughout the UK and Ireland. Well, joining me now, I'm very pleased to say, is Bosch's Global Chief Executive, Dr. Stefan Hartung. Herr Doctor, welcome to you. Robert Bosch did play a crucial role in establishing the UK car making sector. How big a role, though, is auto in your UK business these days?
Oh, that still has a major role, that's for sure. We are also active in consumer business, industrial business, but still the auto business is key. And it's also key for the UK. And obviously, that's our interest, that the automotive business in the UK is fluent and running with our customers and partners over there. And also the edge of technology, which is in AI and automated driving. That's what we also do in the UK. And that's also where we have invested in the UK. And over the last 2 years, we mentioned it's about 600 million we put in, which shows that we think in the UK is a good location to be.
And which are the main priorities for that investment?
Well, we put some money into a small company that is dealing with AI applications for automated driving. And we bought Hydroforce, which is an industrial company dealing with hydraulics, which has its headquarters in the UK. And that brings us now to a 6,700 people operation in the UK. And I would say are continuously growing, because even in the situation we are right now, we didn't have so much growth in the last year because of the shrinking consumer business, but a very substantial growing automotive business. We are about a £3 billion operation in the UK. And with our history, I think we want to go on.
Very interestingly, I think you're targeting global sales growth this year of between 6 and 9%. You're already running ahead of that here in the UK.
Well, a bit, yes, but we have to be careful about forecast for that year. I still hope that the 6 to 9% in total will be reachable, and also the UK will be superseding this. But on the other hand, we all know that the economic conditions are not easy to analyze right now. I think we will still see some weakness in the consumer business, but I'm betting on that people need to buy some cars which they couldn't buy in the last year. So I think there will also be strong growth drivers also in the UK.
We've just been speaking to our previous guest about generative AI and the productivity improvements it can push through potentially. What are you doing on that front?
Well, the foundational models were a huge breakthrough, which we actually experience now week by week. You have to think about that. 6 months ago, nobody was really talking about this. And now we see it in application, even on our private phones. And that's a major breakthrough, because that will now bring a productivity wave in the jobs which deal with language, for example, or with pictures. And guess what? That's all the jobs we do. And we will reach productivity gains which are substantial in the next years. And I absolutely believe the numbers which have just been mentioned by McKinsey. The key is now to find the right applications fast enough in businesses as well as in applications for consumers to gain these productivities, because that's the major point of this, to gain productivity with these generative AI tools.
And implicit in that, I guess, is a degree, certainly, of upskilling for employees.
Well, the good thing on the foundational models, they are very easy to use. Actually, what we're seeing is something which is dramatic for the AI business. So far, AI was something for super specialists, right? People with PhDs, long years education, mathematicians, and specialists. That's what we still have. So we have many hundreds of those people working for us. On the other hand, what we see with the foundational models now, it's kind of a democratizing of AI models for everybody. And that's what you see also on platforms like GitHub, where a lot of programmers worldwide, which are not AI specialists, are now applying AI in a wider scale. So I think the upscaling of knowledge is actually made easier with it, and AI will be much easier to apply.
Now, more broadly, we learned last week that the Eurozone economy has slipped into recession, albeit on a very shallow basis. Is that affecting investment decisions you're making and how you're approaching running the business in the second half of the year?
Well, second half of year, I hope that we see some of these effects not coming as dramatic as we thought. And that's already foreseeable. That's caused by a good thing and a bad thing, right? On one hand, we see that some of the interest rate hikes, which are necessary to fight inflation, are now postponed a bit or put a bit on a stop, which is on one hand probably positive for this year. So maybe some growth dynamic will be a bit better than it was forecasted about 6 months ago, where we strongly thought that a recession is coming. And maybe even the UK, you saw that, is getting by that and it's not hitting a recession. Germany is in a recession, and it's a shallow one, not a deep one, but there is one, and we have to get out of this. On the other hand, that less aggressive work on interest rates by the central banks could lead to a further prolongation of the inflation scenario. And that's obviously not a good news. So that's bringing further risk for 2024. So I see a mixed bag. Right now, I would say we stay on the plan and continue to invest in our growth areas and the transformation. But definitely the waters are not easy to read.
Now, the German government is forging ahead at the moment with a ban on new gas boilers as of the beginning of next year. It's proving very unpopular in Germany. Is it causing you much of a headache?
Well, we are in the gas boiler business. You know that also in the UK with Worcester. We are one of the major players in the UK for gas boilers, and also in Europe with Buderos and Junkers. These gas boilers are all to be hydrogen ready very soon, right? So that everybody who buys a gas boiler can transform it to a hydrogen gas boiler, which is absolutely CO2 free. And that's also now in the German regulation got a footprint, because in the first regulation concept, we saw the gas boiler was pretty much banned, right? It was not seen as anything that can be useful in the CO2 neutral scenario of the future. On the other hand, it's clear that we will have a hydrogen economy and we will need it. And we have huge gas infrastructures. And the UK has one of the best gas grids worldwide, reaching pretty much every household, and similar also in some areas of Germany. So the question will be which technology, which is CO2 free, will be the best one. And you see the current regulatory setup, which is discussed as we speak. It will go into Parliament maybe this week or next week, and then discussions will go on. This is much more technology open. And I would, as a technology person, say, let's keep things technology open as long as they are CO2 neutral. But that will show in the next decades then what's the best solution for each area of the world. There's probably not one, there's many.
Now, more broadly also, you've been investing recently in chip manufacturing capability in the United States. What's informed that decision? Is it concerns over security in Taiwan?
Well, the chip investments we do are strategic because our chip business is in special areas. We are not a giant chip manufacturer by size. We are specialized. We do ASICs, which is special chips for some automotive applications and also some consumer applications we need for our products, mostly made for ourselves. Then we have a sensor business, which is a broad business for all kinds of consumer devices. So many of the consumer devices you use have these tiny, tiny microsensors in them, and that's what we do. And obviously, we're working on the power conversion technologies. This is the silicon carbide technology, for example, which you use for electric vehicles. This technology is very important to get these vehicles more efficient, longer duration of run, less battery size, so that's bringing a lot of economics. And for this, we bought a facility in the US and in TSI to build a silicon carbide factory over there and ramp it up. And that's definitely, I think, a good way to go, because silicon carbide will be the essence of electric cars next to batteries.
Herr Doctor, great pleasure to catch up with you again this morning. Thanks very much indeed for speaking to me. Appreciate it.
Thanks a lot.
Last night's strong finish on Wall Street on the back of benign US inflation data was followed by mixed trade overnight for equities in the Asia-Pacific region. Here's the state of affairs there. Hong Kong and Shanghai in negative territory. You'll note that in the top left-hand corner of the screen, the Nikkei in Tokyo hit another 33-year high. Well, in Europe this morning, stocks have largely been trading to the upside ahead of the key interest rate decision tonight from the US Federal Reserve. That's the current picture. All of the main continental European indices in positive territory right now. Talking points this morning include Casino. Shares of the debt-laden French supermarket have surged by 15.5% in Paris. That's after a consortium of business people made a €1.1 billion takeover approach. Well, here in London, it's a bit flattish by comparison. The FTSE 100 is up a third of 1% right now. Consumer stocks dragging on the index to an extent. The leading blue chip gainer in percentage terms this morning is the tool and plant rental group Ashtead. The shares are ahead right now by a further 2.75%. That was on the back of a very strong trading update that the company put out yesterday. On the downside, well, there was an after-hours announcement last night from the gaming group Entain, the owners, of course, of Ladbrokes and Coral. They're buying a Polish gaming group called STS for £750 million. There's a big share issue to go with that to fund that acquisition, and Entain shares are accordingly off by some 10% this morning. Outside the FTSE, well, leading mid-cap gainers right now is Games Workshop. I mentioned them a little earlier on. The shares up 4% on that trading update, while Wizz Air, as you can see on the screen there, up by nearly 3.25%. That is on positive broker comment. The broker's really warming to this one right now. On the downside, the used car dealer Motorpoint, its shares are off by some 3% right now. That's after higher financing costs pushed it into a full-year loss. Meanwhile, the specialist plastics firm Victrex, its shares are off by some 5% right now on a profits warning. They were down 7% earlier on. On the foreign exchange markets, well, the pound yesterday hit its highest level for a month against the US dollar on the back of the punchy wages data. It's consolidated those gains this morning. Sterling up another 1/5% against the greenback. It's up a 10% of 1% against the euro. The single currency, meanwhile, is up a 1/10% against the dollar. As for the oil price, well, that rallied last night for the first time in 5 sessions. And again, it's consolidated those gains this morning. A barrel of Brent crude will currently set you back $75.01 a barrel. That is up a little under 1% on the session. Joining me today is Victoria Scholar, Head of Investment at Interactive Investor. Victoria, good to see you. Let's start with Shell, obviously a very, very widely followed stock. The share price hasn't really moved too much on this. I thought it was quite a significant announcement.
Yeah, me too. Not such a huge move in the shares, but certainly some significant announcements, most notably to try and attract investors to the stock by returning cash to shareholders through this increase to its dividend of 15%, although some analysts were penciling in an increase of something more like 38% about a month ago. And it's also increasing its share buyback program. It's also got ambitious goals to reduce operating costs and capital expenditure, and it's sticking to its climate targets, although it is keeping its oil output unchanged. So perhaps for those climate activists who were storming its AGM just recently, they're not going to be too happy about this development. And it comes after a similar move from BP, which scaled back its emission targets earlier in the year. But like you say, it's the Capital Markets Day. It's time for the new CEO, or relatively new CEO, Wael Shawan, to come to the fore and set out his goals for how he sees the company. And it seems as though the goal is to try and position itself for this shift towards renewables, but still benefit from any ongoing demand for oil over the next few years.
Now, obviously, Entain has sold off on the back of this announcement late last night that it's buying a big Polish gaming business. Is that just an automatic markdown to reflect the fact that there's a whole welter of new stock on the market, or is the market just not very happy with this deal?
I think it's probably the former. You know, it's a £750 million deal. It's issuing new shares, and it includes £450 million worth of cash for this acquisition. And often we see that the purchasers in a big M&A deal tend to see their shares decline after a deal, and then the targets tend to go up. And that's exactly the price action that we've seen today, with Entain down by about 10%, while TS up by about 10 to 15%. And we know that inorganic growth is a huge marker of this sector. We've seen so many acquisitions over recent years, and this one is to try and bolster Entain's presence in Eastern Europe, particularly in Poland.
Victoria, what did you make of the trading update from Robert Walters this morning? I mean, we keep hearing it's a really tight labour market. That was borne out in the data yesterday. You'd think these would be good times for recruitment firms.
Well, on the one hand, we have this very tight labour market. Yesterday, we saw that employment grew quite significantly. We saw that sharp increase in wage growth. But on the other hand, in that report, we actually saw that job vacancies have been falling for 11 consecutive months. So there's some sort of conflicting dynamics when you kind of dig deep into that data. And I think what this fall in vacancies suggests is that businesses are very cautious about their hiring plans, particularly when it comes to taking on people on full-time contracts. Instead, they're looking at temporary staff to try and plug those holes amid the uncertain economic backdrop from inflation, from sluggish growth, and other pressures as well, rising interest rates, for example. So we've seen that a lot of companies have become a lot more cautious about hiring. We've seen hiring freezes. We've seen lots of job cuts, as well as that macroeconomic uncertainty starts to weigh. And that's really been reflected by the slide we've seen in Robert Walters' shares today and that profit warning.
Now, obviously, we get a policy decision from the US Federal Reserve this evening. What are you looking out for?
Well, this is really interesting because we've had a whole host of aggressive rate hikes since March of 2022 from the Fed. And just yesterday, we had that improvement in the inflation picture coming down to 4%. So now it's all about the Fed skip. It's going to likely miss this meeting in terms of another rate hike, keeping rates on pause today, but that's certainly not the end of the rate hiking cycle. And I think that's what we're going to hear from Jay Powell in the rhetoric today, that while we may not see a hike today, that doesn't mean that hikes are over, and that it's going to be watching the data closely, monitoring what's going on in terms of the inflation backdrop, because although the headline CPI inflation figure has come down to 4%, if we look at the PCE prices data, which is the Fed's preferred measure of inflation, that's still at 4.7%. So that's sharply above that 2% target. So there is still some way to go for the Fed. But of course, it is a fine balancing act. It doesn't want to inadvertently tip the US economy into a recession, but it still wants to keep a lid on those price pressures.
All right, Victoria, got to leave it there. Good to see you as ever. Thank you. Now, Barbie has been around for so long, it's perhaps surprising that she hasn't featured in her own movie until now. Barbie the movie hits cinemas next month, starring Margot Robbie and Ryan Gosling. The doll has been manufactured since 1959 by the American toy company Mattel. Ynon Kreiz is Mattel's chief executive and executive producer of the new movie. I'm going to be speaking to him in just a moment, but here's a clip to whet your appetite.
Cold shower, falling off my roof, and my heels are on the ground.
There we go. It looks a hoot. Ynon, very good to see you this morning.
Great to be here.
You have an entertainment industry background, of course. You were previously CEO of Endemol. I guess this is a natural progression for you, is it?
Well, we've been on a journey at Mattel to transition from being a toy manufacturing company that was making items to become an IP company that manages franchises. And this movie is very much part of this journey and how we transform our company.
I gather you've got another dozen or so movies in the pipeline.
That's right. In addition to Barbie, we have 14 other movies in development with stars like many that I should mention, but Tom Hanks is one, Vin Diesel is another. We're producing a Matchbox movie with Skydance that made many exciting action films like Top Gun and Mission Impossible. So we're collaborating with some of the most prolific filmmakers of our generation, which is a great place to be.
And in terms of the intellectual properties that you own, I mean, obviously you have a vast range of assets. Which are the ones that you feel are most underexploited and potentially most ripe for this sort of treatment?
Well, we own one of the most prolific portfolios of of children and family entertainment franchises in the world. And that gives us exciting opportunities to continue to evolve as a company. Think of Hot Wheels, American Girl, Uno, Matchbox, Masters of the Universe, Monster High, Thomas the Tank, and many, many more. So we can go on and on and on. This is an exciting opportunity for us to transform as a company outside of the toy aisle.
What's interesting, though, is that, the Barbie movie is clearly not just aimed at children. I mean, you're going for an adult audience as well.
That's right. The Barbie movie is a big, bold comedy with heart about self-discovery and empowerment. It brings together fashion and music, self-deprecation, humor, and iconic cultural moments. And it will speak to audiences of all demographics, the Barbie fans, of course, but many beyond that.
So this is a real drive at broadening the customer base.
A big part of it is the continued evolution of Barbie as a brand and part of our own franchise management strategy. The Barbie movie will recontextualize the way people think of Barbie and how much Barbie has evolved as a global brand.
I mean, a lot of people have issues with Barbie and say it portrays women in an unrealistic way. Are you trying to address any of that through the movie?
Well, the brand has evolved. Barbie today is a flag carrier for diversity and inclusivity. Barbie represents the world through the eyes of children. And as a brand, Barbie has more than 170 different representations, more than 200 careers. And the brand purpose is to inspire the limitless potential in every girl. And this will very much be brought together in the movie.
And I gather the Mattel CEO plays a part in this as well.
That's right. I can say that Will Ferrell can get away with a lot more than I can. We have slightly different leadership styles, but I'm a big fan of Will ever since the Zoolander days. I'm a big fan.
I can't wait to see that in particular. More broadly, I mean, Mattel was it's fair to say, it was in a spot of bother when you became CEO. What made you want to take the job?
Well, Mattel is one of the most iconic corporates in America and in many ways around the world. We have an important product, we do important things, and as a company, we have real societal impact represented by our brands. I was very much attracted by the opportunity to work at Mattel, to lead a transformation, and have impact on our consumers.
Obviously, you've de-emphasised the manufacturing and you are steering it towards more an intellectual property asset-light business, if you like. Did you actually have to sort of think down and think at the outset, this is the way out of this company's problems?
You know, one of the most important realizations for us is that people who buy our product are not just consumers, they are fans. And once you realize you have an audience, many opportunities become self-evident. And the opportunity for us is to expand our business beyond the toy aisle. We love the toy business. It's a great place to be, but the opportunity for Mattel, given the portfolio that we own, is to expand beyond the toy aisle into content such as film and television, consumer product and merchandise, digital experiences, and all of it as part of our mission to create innovative products and experiences that inspire, entertain, and develop children through play.
And has the shareholder base changed much since you became CEO? Are people buying into this vision?
We believe so. The company continues to evolve. This is a multi-year transformation strategy. Financially, we achieved tremendous progress. We recently became investment grade. We're launching our first movie. We recently won back the Disney Princess and Frozen line, which is an important opportunity for us to continue to expand our business. And we're very confident and excited about our journey ahead.
Ynon, very good to see you this morning. Thanks very much indeed for sparing the time, and good luck with the movie.
Thank you so much.
Our regular viewers will know that we've been reporting from London Tech Week throughout this week here on Ian King Live, in particular the discussion on the capabilities of AI. While ChatGPT is one of the best-known AI applications out there, it is by no means the only one. The software consulting and cloud technology giant IBM is about to launch a new version of Watson, its data analytics processor, with the aim of helping clients make more use of their data using AI. Well, joining me now, I'm very pleased to say live from the United States is Rob Thomas, who's the Senior Vice President of Software and Chief Commercial Officer at IBM. Rob, very good to see you this morning. How will this new product, Watson X, differ from previous offerings?
Ian, great to be with you. Thank you for having me. We are at an incredibly exciting time where businesses know they need to do something with AI, but they're unsure of what to do. we have launched Watson X, which is a platform for building AI and, just as importantly, governing AI. It's a big difference in how we're approaching this, which is not just can you get AI working for your business, but can you do it in a way that is safe, that you understand how decisions are being made, that accurate decisions are being made. We think it's the perfect time to be delivering Watson X.
So what will a typical application be for Watson X?
Every client comes back to three use cases, three different ways to use it. Number one, customer service. Every company has customers. They want a better way to serve them in an automated fashion. That's number one. Two is the broad category of what I would call digital labor. How you automate repetitive tasks. Think of these as back office tasks where you're doing the same thing over and over again. And third is IT automation, really automating how you run your own technology or IT systems. Every client that I talk to, those are one of the three use cases that they typically start with.
Now, your CEO recently said he expects as much as 30% of back office jobs to be replaced by AI. How rapidly do you think that will happen?
I think the key point here is on a forward-looking basis. Companies probably won't need to hire as many people in the future as they would have before because we've used AI to make their existing employees more productive. I could see that starting to happen even inside of the next 12 to 18 months because you can get up and running really fast with Watson X. That's a big difference from before, since you asked, where sometimes it was a very long consulting type engagement. Now, as a platform, you can get up and running very fast, which means you can start to defer hiring and drive more productivity in your workforce, really effective immediately.
But what is very interesting, though, is that IBM yourselves, you have put a freeze on hiring in posts that you think could be potentially replaced by AI relatively rapidly.
I would maybe slightly correct that. We haven't frozen hiring. We're hiring aggressively. The type of roles that we're hiring for, yes, that has changed. Because when you can use automation to do some of these other tasks, we can now focus all of our hiring on things like quantum computing, which is a big focus for IBM, deep AI skills, which continues to be a focus. So it really changes the dimension and the profile for what we're in the market hiring.
Great, thanks for clarifying that. There's a lot of talk right now in the air about regulation. Can it meaningfully happen?
I think it's going to be necessary. The question is in what form. Consumer AI, you mentioned, things that are happening in consumers, enterprise search. I think we need some regulation for that because in those instances, you're using publicly available data, sometimes personal data. I think that needs to be considered. The use cases I'm talking about are in more narrow domains where you're saying we're going to work with this company with their confidential data. I'm not sure that we need to regulate that. So I think the key regulation challenge is how do we protect consumers and how do you distinguish that from AI in a business, which is a completely different task?
It's also a big challenge for employers, though, isn't it? Because, if I'm an employer, I want to be sure that my staff are using AI appropriately and not using it in an unethical way.
This comes back to why with Watson X, we've said trusted, scalable, adaptable. This is what it means to put AI to work in your business. And the most important thing is, can I trust the decisions that are being made? There's this phenomena in consumer AI that's called hallucination, where you're getting answers that don't really make sense. No business will accept that. So with Watson X governance, we ensure that you're going to get accurate answers. You're going to be able to explain how the answer was made, even to the point of being able to talk to a regulator to say, this is why the AI made the decision that it did. I think that's going to be really critical for businesses.
Rob, before I let you go, obviously Rishi Sunak, the UK Prime Minister, has said he wants the UK to be a global player in regulation. Is he onto something here? Is it going to be even possible to coordinate regulation globally?
I think it's going to be hard to predict what each government may decide to do. What I would say is we believe in an open approach to AI. We don't believe in a single proprietary AI model. We believe this is going to be about multi-models running on multiple clouds. We would love to work with the UK government, and we actually have some discussions going right now where we can work with them to deliver an open environment for using AI in a responsible way. And the governments that I talk to around the world, I think that's the approach they're going to want. They're not going to want one model dictated to them. They're going to want an open approach, use open source, bring the best capabilities from enterprises, companies around the world. We can do that. We look forward to partnering with governments all around the world.
All right, Rob, we have to leave it there. Thanks for joining me today, and especially at such an unsociable hour your time. Do appreciate it.
Thank you, Ian.
Time to have a look at this morning's business pages, and the Financial Times splashes its print edition with the warning yesterday from the Bank of England Governor Andrew Bailey, during which he admitted to peers that inflation is taking a lot longer than expected to come down. The FT's influential Lex column says that the bank's struggle to control inflation is partly a consequence of its own failure to predict its rise and persistence. The FT also reports on its front page that JP Morgan is terminating its relationship with Odey Asset Management, making it the last of the big banks to cut ties with the firm in the wake of sexual misconduct allegations against its founder, Crispin Odey. Well, that story makes the lead in the business pages of The Times, which also reports on yesterday's moves in the market in gilts UK government bonds on the back of yesterday's robust wages data. The yield on two-year gilts yesterday hit its highest level since the financial crisis in 2008. Well, the Daily Telegraph leads its business pages with that story, reporting that Downing Street has ordered banks to protect struggling homeowners from soaring mortgage costs, as markets bet that interest rates could hit almost 6% by the end of the year. The Telegraph also reports that up to 13,000 drivers in the ULEZ and congestion charge databases have been warned that their data was stolen by Russian hackers in a cyber attack on Transport for London. Well, joining me to talk about some of these stories is Ruth Sunderland. She's Group Business Editor at the Daily Mail and Mail on Sunday. Ruth, good to see you this morning. You've actually picked out a different story in the FT, which is the appearance before MPs yesterday of Ray Newton-Smith, the CBI's new Director General.
Yeah, that's right. So one of the very interesting things about the CBI, which, as we know, has been fighting for its life after a series of very unsavoury and quite serious allegations, has been the lack of transparency that it's had about its members. So it's been strangely unwilling to say how many members it's had. So it actually has. So when they presented last week the vote of confidence in them with a 93% majority as a kind of landslide victory. In fact, we now discover that out of only 371 people that voted, if you take the whole membership, which we learned yesterday is 1,200, actually that's support from less than 1 in 3 of its members, which is rather less impressive as a mandate to go forward. So it does continue to raise questions about the CBI and the role it can play, and whether really, given what we now know about the level of support that it garnered, it can claim to be the authoritative voice of British business, which it is what it wants to claim.
Yeah, do you think it's going to ride this storm out, Ruth?
I think the jury's very much out. I think we'll discover that a bit later on in the year. People have got their memberships coming up for renewal, so a big issue is going to be whether those companies actually do decide to renew or not. We've yet to learn really whether they've won back the ear of government and indeed the Labour Party. That's crucial for the survival of the CBI. There are also some quite big unknowns. We don't know who's going to be the new president to take over from Brian McBride, the current president. He said that he's standing down by the within the next year. So we don't know who's taking over. We also don't know what's happening. A couple of people who have been in the spotlight have said that they might, or hinted that they might take action against the CBI. So there are a lot of question marks there hanging over its future, and other organisations like the British Chambers of Commerce, which are jostling to try and steal the CBI's clothes. So I think it's very much an open question. And of course, the bigger question in the really longer term is, can the CBI actually attract completely new members, as well as keeping the ones it's got and bringing back into the fold the ones that have recently left? Can it actually attract new tech firms to join? And I think very much, though, we don't know the answer to those questions.
Yeah, very good point you make there, Ruth. Now, you've also picked on a story in The Times, which is something we've talked about on this programme a lot, the runaway success of the Japanese stock market this year.
Yeah, so it's quite the story. The Nikkei yesterday went over 33,000. It's the highest it's been for 33 years. So a nice bit of numerical symmetry there. Why is that happening? Well, investors seem to be falling back in love with Japan a little bit. There's been progress by Toyota on electric cars. There's a bit more optimism around SoftBank, which, as we know, one of the biggest tech investors in Japan. So it's all beginning to feel a bit more rosy. I think there's also an element of Japan benefiting from disillusion around the US and some other markets where there's an awful lot of political turmoil and uncertainty. So people are looking elsewhere. Of course, people with long memories would remember the last time that we all got very enthused by Japan in the 1980s. It did all end in tears. And in fact, the Nikkei isn't yet above its peak, which was reached in 1989. So I just say that to put a little bit of perspective around it all. But the Times, as you say, they've called it the land of the rising index. I suppose that was just irresistible as a headline, really, wasn't it?
Yeah, absolutely. I remember it well, 1989. Now, Ruth, shout out to your paper. You've been running a campaign on bringing back VAT-free shopping for tourists, and you've got a couple of new names who call to the colours today.
That's right. So bosses at Heathrow are saying that they would like to see the VAT-free shopping reinstated for tourists. We have seen post-pandemic that we have had spending by visitors has got back to pre-COVID levels in the UK. But in other countries, such as Italy and France, it's done much better than that. So it's increased on what it was before. And a lot of people think really that is to do with this inability now to reclaim VAT. So it was under the Rishi Sunak chancellorship in 2021 that was scrapped. The Treasury says it's costing $2 billion a year. Other analysts say actually there would be a net benefit to reinstating it. Just because of the increased spending overall. Now, what's very nice, I think, today is we've seen Britain's first master Savile Row tailor, a lady called Catherine Sargent. She's also backed our campaign. There are now 200 businesses and business leaders backing that. I don't know if you've ever been in her shop. I did interview her once, and you know, it's remarkable and really great to see a woman doing so brilliantly in a male-dominated field. But she says a lot of her international clients are now going to Milan or Paris instead, which is a great shame.
It really is. Now, before I let you go, Ruth, we were speaking to Ynon Kreiz, the CEO of Mattel, earlier on, and who's that lurking in the background on your desk? Is that business editor Barbie?
That certainly is. I'm really glad you asked me that. So a friend of mine gave me business editor Barbie about a year and a half ago. I think she's fabulous. She's got pride of place on my desk. I would have loved to have been given her when I was a little girl. When I was a little girl, I used to go around with notebooks and pens writing stories about things. So obviously I was always quite keen on getting into journalism from an early age. I think it's brilliant that Barbie's being modernised and great that she has so many careers. I didn't realise quite how many. Anyway, including business editors. So encourage your daughters.
To the camera, Ruth. Let's have a look.
So her hair's a little bit of a mess. I should have given her a better hairdo. But here she is with her press pass, and yeah, looking fabulous.
Absolutely brilliant, Ruth. Lovely to see you as ever. Thanks for joining me today.
Thank you. Thanks, Ian. Bye bye.
Back to TV presenter Barbie now, or TV presenter Ken, if you like. Returning to London Tech Week now, and on Monday, Rishi Sunak addressed the conference, promising to ensure UK tech firms had access to the finance they needed. Well, this morning, the Secretary of State for Science, Innovation and Technology, Chloe Smith, is making the keynote address in London. I've been speaking to her about what more the government can do to ensure that tech companies in the UK thrive.
The UK is a really thriving environment for tech, and you can see this reflected in, for example, new research that suggests we've taken the crown from New York for development and deployment of tech. But for that to continue to be true, the government will be playing its part to continue to support startups. For example, we've had the Chancellor addressing London Tech Week talking about how we can work with the likes of HSBC Innovation Banking and so much more to ensure that there is the access to finance that will be needed, and then other tools to continue to help firms to grow. So that's the startup aspect and the scale-up aspect. Now, we also see business confidence rising. This is critically important, I think, and you see, for example, research from PwC and also Deloitte suggesting that this is coming to sharpened levels, and that's exactly as we want it to be, because the message here is that Britain is open for business. London Tech Week is a demonstration of that, and we want to play our part to ensure that every part of the ecosystem can continue to grow and to thrive.
You've put your finger on a very crucial point there. The UK is great at starting tech companies, but getting them to scale up is something we really fail at. How do you stop startups from selling out to the US tech giants the moment they look like they might be scalable?
Well, and we know that it's really important to continue to ensure that Britain is perceived to be the best environment to grow in, and that's why we're taking a range of actions. For example, we're putting more into R&D investment, and we're ensuring that actually the tax relief system also reflects that, which is really important. But we also know that things like the skills pipeline are essential, and that's why we're working to ensure that we're bringing skills through schooling and higher education that will be suitable for the tech industry, but also actually that we're attracting global talent. So, for example, the graduate visa is really important here because firms can draw on graduates from the top 50 universities around the world, and they can come to the UK for 2 years and be part of the tech ecosystem or many other opportunities as well.
You mentioned the support and tax release available for tech companies. It's one of the common complaints that I hear a lot is that it's great for big corporates to attract that sort of money. It's much harder for SMEs to get their hands on it.
Well, and we can understand that, which is why we're going to lengths to ensure that actually there is support there for SMEs. And as I say, it's also why we are focusing on support right at the very seedlings of things. So R&D is incredibly important in that. And also we are focusing on supporting, for example, spin-outs and scale-ups from the university ecosystem. Not forgetting that, again, we are globally leading there because we have, a number of the very top universities in this country. All of this together, of course, is also why it's really important that we have the department that I lead, the Department for Science, Innovation and Technology, which is dedicated to supporting this country to be a science and technology superpower. And that means supporting the very, very smallest to continue to grow, to take their amazing ideas. And why? Because those ideas are going to change lives. That's what we're really interested in. And you see that reflected, I think, at the stands at London Tech Week and much more.
Now, the PM said last week he wants the UK to be a global leader in the regulation of artificial intelligence. What's that regulation going to look like?
Well, you will have heard him say also at Tech Week that we want to be able to lead domestically with a pro-innovation, agile regulatory framework that will allow us to gain the benefits of artificial intelligence whilst also ensuring that people can take confidence in the safety and responsibility applied to that technology. But he's also set out, quite rightly, that we have an opportunity to lead globally, so to lead domestically but also to lead globally. And there, the UK is going to be hosting the first summit on AI safety, and I think this is really exciting because, again, it's about opening up the potential of this technology, but doing so in a safe and responsible way that allows people to take trust in it. And thirdly, what we want to see out of all of that is the application of these huge pools of potential to the benefit of British citizens, and we'll see that through public services.
Is there really any point in attempting regulation of this kind without getting the likes of China involved?
Well, first of all, let's be clear, actually. In terms of regulation, we are following the approach that we've set out in our AI white paper in terms of the UK, which is to draw on our existing regulators and to have an agile and flexible framework that will allow us to keep pace with the technology, which is moving very, very fast. Internationally, I think what we're looking at is guardrails. I would characterise it more as the guardrails that will be needed to allow governments and the firms, the frontier labs and others, to work together to bring this extraordinary technology to a place where it can be trusted in for being safe and responsible.
The European Parliament, of course, has its own pretty well-advanced AI bill going through the process now. I mean, isn't this an issue where Brexit has been a real handicap? Wouldn't we have been better working with the European Parliament on this?
I don't think this is a Brexit issue at all. I think that's a red herring, if you don't mind me saying so. The key point is that we are able to set out what we think is the right approach for Britain, and as I've said, we think that needs to be a pro-innovation, agile approach. We can see some drawbacks in running too fast to legislate here, because actually the technology is moving much more swiftly than legislators could right now. So we think what we're doing is the correct approach in terms of domestic regulation. Now, going again to the international scene, though, we need to work together. And I was only just last week at the OECD talking to many European partners, and we very much share a view here, which is that we have to work together as like-minded allies, and we can and we will. We'll be using fora like the OECD, like the G7, and continuing to talk with our European friends and neighbours, as well as many others, to be able to bring that about.
And looking more broadly at the tech sector, Tech Nation helped develop the likes of Deliveroo, Ocado, Monzo. You've just cut its funding. Why was that?
We are working together with a whole range of partners through the ecosystem. I can't comment on any particular individual funding deal, and I don't really think you'd expect me to do so. But the point is, we have to be able to demonstrate and come together to deliver the sustained position of the UK being a leader in tech. Now, we are already very well established in doing so. For example, you look at the rate of unicorn formation here in the UK, and actually it's better than that of France and Germany combined. And a few other indicators as well that demonstrate how the UK is the tech capital of Europe.
Now, you, of course, are in this capacity as maternity cover for Michelle Donnellan. How's this working out? I mean, there's nothing really been tried like this in government in the past.
Well, it is still quite historic, it must be said. It's only the second ever time this has been done at the Cabinet table, and the first in a policy department. So, for me, I think it's a really important opportunity, and actually when the call came through, I was delighted to take the role, not only because the subject matter is so thrilling and so profound and so compelling, but also because I want to see maternity leave be normal and be successful at these highest levels of government. The way I'm approaching that is, I'm sure, as any person in any organisation would, to be able to deliver proper support to a friend and a colleague, which is that I've been sitting down with Michelle Donnellan to look at the programme to make sure we can sustain delivery. We know, of course, that actually we're both delivering the Prime Minister's very personally held objectives as well about science and technology. So it's a really exciting agenda. We have every opportunity to make the Department for Science, Innovation and Technology one of the most innovative places in government, working with so many partners across tech and science to do so. And I know we're both absolutely committed to that.
Well, that's it from me for today. There's much more on the Sky News mobile app and on the website, with reporting, video content and analysis from our business team. In fact, there's a piece from me up there right now on business empire of Silvio Berlusconi. Do have a look at that if you can. I'm back at 10 o'clock tomorrow morning, hopefully on the TV channel. In the meantime, thanks for joining us today on this very special digital-only version. See you tomorrow. Cheerio.